Good morning, everybody. So funny, it's still 9 a.m. and I still feel like I'm late. How's everyone doing? Hope you guys are good. Gene, chart issues. Why would this one-to-one show up early and out of price order? What does that mean? Out of price order. Gene, I don't think this is a problem. One-to-ones print real time. Yep. So Gene, one-to-ones print real time. So this started printing right here. When this bar was going. Hey, good morning, D Soap. Nice to have you. Why would this one show up early? And I don't understand what that means, out of price order. It's at 31.25, right? Oh, there we go. I see you now. Holy smokes, I have no idea, Gene. I don't even have a guess. No, I see the prices now. I don't even have a guess, I'm afraid. That's a data issue. That's got to be a data issue. Something's weird in there. I would this weekend, I would delete and rebuild everything and see if that helps. I'm sorry you're having these challenges. I'm not exactly sure why that would do that. And then let's see what you did here. Is this NASDAQ? Nope, this is crude oil. So, we've got a bad bottom, divergence. You went long just below the midband. It went to the bottom. So it got you. It looks like your stop was still inside the large triggers here, which is it's just tough. When it's bouncing off that midband and coming back, Gene, it's going to close the gap more times than not. Um, the HVA entry isn't valid. It doesn't fit the rules. You don't have a termination that created the full reversal. You also don't have an HVA line inside the smaller large triggers pointed up. Two rules violated on the HVA trade there. And then notice how this HVA is right there at the small, right at the large up, and that's the one that works. Do you see the difference between the entries? Yeah, let those triggers roll, man. It's just a little patience piece because as these triggers roll, you kind of let it sort out. And since it's from a bad bottom, technically it can't be an HVA. This is you just looking to get in on the reversal when everything goes, and the HVA line helps a little bit. It's a good look. I think the second one, when those triggers roll and get up there, creates a higher advantage for sure, Gene. It's a great read. The first one was just a little bit early. And then one of my favorite phrases, the area broke. It did. It did break, and if you took the first shot, it gave you a chance to manage out, and that's exactly what happens, it looks like. You got in, and those divergences started rolling, so you were kind of betting on that holding, and three divergences. Yeah, that's a great break-even trade. I think that's a solid first entry on a broken area. And then amazing awareness on everything changing with the three divergences. Nice job there, Gene. And tell your niece congratulations for us. Safe travels, and we'll see you on Monday. Good stuff, man. I'll ask John if he has any idea. I'm going to hold on to that picture and see if John has any idea on that one as well. That's kind of a wild thing with that one-to-one, and we'll see what we can get. All right, guys. Gene, take care. Thank you for being here. Enjoy your weekend, and let's get this classroom going. Hope everybody's doing well. I like it. Hope everybody's excited. It's the weekend. Here we go. I need to open up some charts, so I'm going to pop those up real quick, and then we're going to come back, and let's get into Friday. Let's have some fun today. Dave's Trading, welcome to the room. It's great to see you. Word on the street is that you're new. Awesome to have you, D Soap. I know that you're new. Great to have you as well. Freddie, nice to see you back. Um, For those of you that are new, this is your class. This isn't the Mark Novak lecture. This is, you want to talk about high probability trend trades? Let's do that. This is not a lecture, ladies and gentlemen. This is very much a discussion, just like Gene did. Gene posted some pictures. He had some questions. Um, and he got a little feedback, and now he knows to be a little more patient on that HVA trade, looking for the best of the best, guys. This is what we do every day. Chris L., I did all sorts of research. I couldn't find anything that mentioned the number of orders it takes to create a tick. And man, I scoured the internet yesterday, and I didn't come up with an answer. If you did, share it. Man, I'm wound up today. Sorry, guys. I slept great. I don't know. Maybe there isn't a recipe. Maybe your broker would know. Absolutely. That would be a cool one to send your broker and see what he says. Did anybody watch news today at 8:30 a.m.? That high impact news, guys. I go to Forex Factory. Whoa, that's Gmail. We don't want that. We want this. I go to Forex Factory every morning, and I'm like, what's going on? And I don't worry about what it is. I see these red boxes, and man, I sit on my hands. I say, no way am I jumping in front of that freight train of emotion. And guys, if you were watching, actually, probably S&P or Nasdaq, my charts are still loading up right now. Sorry, I'm a step behind. It went absolutely nuts, and the Nasdaq stayed nuts for about 5 minutes. Seemingly perfect entries got run over. Didn't finish the move while that emotional response was going on. So, one of the things that I do every morning is I come to forexfactory.com. I take a look at all of the news that's going on, and I make the decision to not trade in front of it, to not um, put myself in front of that freight train of emotion. That's my favorite phrase. So we've got this going on at 11:30 a.m. President Biden speaks. We'll see if people react to that. We don't know, but there's no telling what he's going to say, guys. And if he says something that upsets traders, we'll keep the politics out of the room. It may change it. I don't know, Ron. I don't know. But every morning I'm doing that, guys. Every morning I'm checking it out. I don't want to jump in front of anything that's going crazy. And then everything that I talk about comes from the education page, guys. There are no secrets with Nexgen. I think that's one of the phrases that I like to say each and every morning. A lot of people think, well, Nextgen's going to give us a little bit and then keep some from us so that we can have to buy more charts, have to buy more indicators, have to pay for more lessons. And it's just not true. Everything that you need to be successful, I'm going to give you in this first hour, guys. And the only thing that you have to do is earn your experience, right? To go through and practice and ask questions and study. Um, we have seen lately a pretty amazing amount of people getting funded in these prop firms, keeping it simple, focusing on one trade, two trades, not searching for everything. So, guys, I teach this class very much from a foundational approach, an educational approach that gives you the very basics. And then it's up to you whether or not you feel like you need to expand from there. So each and every morning, we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. The first hour of my classroom is dedicated to a high probability trend trade. And a high probability trend trade is a trade when every indicator on every chart agrees for the trade. Guys, there's nothing in your way. The triggers are the strongest. It's the best of the best and nothing but warm, fuzzy feelings. Safia, we'll talk about that towards the end. I love it though. It's such a real path. You should annotate it with your journey on there. A little commentary on what your journey did for you. Guys, this high probability trend trade that we talk about is three rules. That's it. Three rules that are designed to give you three advantages. Oh, awesome, Safia. Then enjoy your weekend, and I'll see you on Monday. Next time we talk, I should be in the Rocky Mountains somewhere. We start driving to Texas tomorrow, so I'll see you. I know, right? And all the trees are changing. I can't wait. Guys, three rules. Each rule creates an advantage. The accumulation of these three advantages is a trade. That's it. As a brand new user, I want you to really like write it down on a piece of paper, spray paint it on your office wall. Your only options as a brand new trader should be either rules met or rules not. So you're either entering a trade when the rules are met or you're sitting on your hands when they're not. And what this does for you is it assures you that you have a statistical advantage every time you enter the market. It assures you that you have momentum, that you have a clear path, that you have an entry area each and every time that you enter the market. We're going to talk about each of these concepts individually that create a trade. But I want to remind you that simple is best. Simple keeps you focused. The less things that you have to think about, the easier your path is. So these three rules are going to happen on only two charts. You're going to have a large chart and a small chart. That's it. It doesn't matter what the numbers are. It doesn't matter how the bars come to be, guys. Know that you have a large chart and a small chart. Your large chart is going to define direction, momentum, and areas. You're going to get two-thirds of the equation for a trade knocked out before you ever take your eyes off of this large chart. It's a broad stroke of a brush. You will literally take the first bar, the most current bar, and you're going to be able to get all of this information. It's going to show you the overall opinion of the market, and I love this picture. It's going to show you what the large crowd wants, the people that move the market, the guys that are dumping money in and taking money out, that are creating trends, that are creating momentum, that are identifying these Fibonacci areas and reacting to them. Guys, these are your large charts. This is what the large chart's doing. Your small chart's nothing more than an entry chart. Your small chart is taking that broad stroke of a brush and it's refining it down to the point where the area is likely to continue. It's an entry chart, and that's really all it's designed for. Eventually, it'll become a little bit of a management chart for you, but large chart leads the way. Large chart gives you momentum with rule number one. Large chart gives you a clear path with rule number two. Absolutely nothing in the way. And your small chart's going to refine it, whittle it down, and pinpoint your area for entry. And this is the easiest way to get to where you want to be through simplicity. Two charts, three rules, 1 hour. We're going to focus on these rules, guys. And then this is going to be your path, should you choose it. Your mission, should you choose to accept it. We're going to learn the trigger lines, the trigger line rules, the Fibonacci rule. We're going to make sure that you understand how to recognize these advantages. Guys, this is my job. My job is to make sure that you're comfortable with these concepts. Your job is going to be to simulate, to practice, to get in there and get reps until recognition comes from repetition. I need you to post your pictures in class, guys, every day. I want you to post pictures of your trades. I want you to post pictures of your questions. I want you to post pictures of your children. Be excited about them, right? But the idea is that you're practicing the correct rules, that you are dedicated and focusing to practicing these rules. Here's the kicker, right? You're brand new. How could you possibly always practice the correct rules? You probably can't. So I want you to break the rules and be okay with breaking the rules and embrace the idea that you can be wrong. It's okay to be wrong. But if you're wrong, I want you to post pictures in the room. I want you to get that feedback because we want to get you exactly where you want to be. When you post a picture in the room, I want you to take a picture of your large chart and your small chart because really, trades come from two charts. I want you to write your rules on the chart. I'm going to give you the rules and I'm going to give you exactly what to write, what you're looking for. I want you to show me where you entered. I want you to show me where you exit. I want you to write on there. How did you feel? What were you thinking? What made you do what you do? And the better you annotate the chart, the better the conversation is that you and I have. Um, we're going to simplify a lot today. We're going to focus on the high probability trend trade. We'll also talk about a medium probability trade. Um, and I'm going to define what both of those are in a second. But your job is to learn the looks until they're easy. So when we talk about a high probability trend trade, let me go to the education page. That first hour, focusing on the absolute best of the best, we're going to talk about a trade where Each indicator on every chart agrees for the trade, guys. This is when everything is going the same way, when the momentum is the absolute strongest, when there's nothing between you and your targets. This is a trade that typically wins 70 to 80% of the time. This is a trade that's going to create confidence through the memory of success. But most importantly, this is a trade that's going to teach you to read your charts. You're going to become a chart reader long before you ever become a trader because your chart reading is going to make you an exceptional trader down the road. You'll be able to open up your workspace and you will understand fluently where the market is likely to continue. And these continuation points are going to become your entries, not only for the high probability trend trade, but for the trades that maybe you take beyond that one. Maybe you move on to momentum trades or medium probability trades. Um, your chart reading is going to have you identifying where the market is likely to go. You're going to be able to use these Fibonacci areas. You're going to be able to use momentum and understand when that market is likely to reach the next point. And then finally, you're going to understand where the market is likely to stop. Likely to stop areas, in my humble opinion, are the most important skill that you can give yourself because where the market is likely to stop is where your trend trades aren't going to work anymore. There are areas that may reverse the market, that may create a huge bounce. Um, and these likely to stop areas are notorious for plucking cash out of new users' accounts. So we're going to talk about the three rules, and you're going to become a chart reader, and you're going to do it through the high probability trend trade. Your ability to read charts is going to take you to what we call a medium probability trade. And this is when most of the indicators line up for the trade. However, a small issue exists. Your ability to read charts is going to have you identifying that issue. And what you're going to find is that this is going to be the vast majority of your trades, guys. The market sets up perfectly 3 to 5 times a day. The market sets up damn near perfectly, probably 10 to 15 times a day. So you're going to incorporate both into your plan probably. But in order to take the medium probability trade, your chart reading has to identify where the trouble spots are. You're going to manage them assertively. Your chart reading is going to allow you to do that. You're going to be able to identify the trouble spots, take a portion off, get to zero risk. And all of that stems from the education that you give yourself on the high probability trend trade. So we're going to focus on the trade that typically wins 70 to 80% of the time. We're going to focus on a trade that revolves around only three advantages, that happens on two charts. Guys, I want you to simulate. I want you to practice. I want you to take pictures. If you need help taking pictures, I want you to raise your hand and say, hey, Mark, I need help taking pictures so that I can get them into the room. Because posting your trades in class is the first step to becoming a confident trader ASAP. The second thing is that recognition piece, and that's using your spreadsheet that Nexgen provided you. It's in your Nexgen Study Picks folder, and it's got three tabs. It's got a tab where you can track every trade that you take so that you can go through and talk about the advantages, the results. You can put notes, what happened. And what this does is this creates a lot of recognition. The second tab is where your personal trade setups are. When your rules are met, you're going to take a picture and you're going to commit this look to memory so that it becomes easy. And then finally, I've got a page that I put together where I steal pictures from the classroom. Every time you guys go full rock star on it, I take the picture and I drop it into here, and you can look at over 250 pictures this weekend. I would encourage you to look at over 250 pictures this weekend of what Nexgen clients are doing with the software. And what you'll notice is that almost every picture on here relies heavily on three advantages. That's why I stole them and put them in there, because it's really kind of the best of the best. It also talks about management and chart reading and termination conditions, but all of this is now yours. I'm dropping it in the room right now. Download it, click and drag it over to your desktop, but study these pictures this weekend, and more importantly, start filling it with yours. Because when you use the spreadsheet, the tracking page is what's going to take you to that next level, guys. Every time you simulate, every time you take trades, you're dropping it in here. It becomes your trade journal, right? Dear diary, today I took a long trade and everything was perfect and I made money. I want to do it again tomorrow. So every morning I want you to study what you did yesterday. If you made mistakes, you're going to recognize it and you're going to be focused on correcting them. If you didn't make mistakes and you found yourself getting paid on these amazing trades, you're going to focus on that and you're going to try to continue it. So you're going to ask yourself what worked, what didn't, what felt easy and kept you relaxed, and what made you nervous, what made those palms sweat and that heart race, right? In this brief historical study, each and every morning, it's going to prepare you for the day. It's going to accelerate your learning. You're going to recognize the patterns that are making you successful, but most importantly, you're going to recognize the patterns that are robbing you of that success, and you're going to be able to avoid them. And then, most importantly, is you're going to recognize the patterns in yourself. We all tend to have a rule that we break, or we jump in early, or we get out too soon, or we get out too late. Um, this spreadsheet's going to help you recognize that, but you posting your pictures in the class, guys, this is, in my opinion, one of my gifts, is I recognize patterns in people. I recognize when people trade nervous. I recognize when people trade aggressive, and we'll have a conversation with every picture that you post, and we'll start nudging you towards that simplicity. So post your pictures, track your real-time performance, keep it simple. You've got to learn the looks so they're easy. So we're going to go through and we're going to learn the looks, guys, and everything starts with the large chart. The large chart leads the way, and the best advantage that you can give yourself as a brand new user is trade with the trend, right? If the large chart says we're going up, your background is going to be green on the large chart. You making a decision to only trade with the trend is going to eliminate an awful lot of mistakes. If the background is red on your large chart, then you're in a downtrend. You're only looking for rules to be met for high probability trend trade short. It's a huge advantage. Don't fight that trend. Um, Green and red. The only way this becomes difficult is if you're colorblind, but let me show you a trick if you are. When your small triggers break above the large triggers, it paints the background green. So the only way you can have an uptrend is if your small triggers are above the large triggers. If the small triggers break below the large triggers, the background paints red. So the only way you can have a downtrend is if the small triggers are below the large triggers. And this leads right into that first rule that says that you have to have strong trigger lines. Because strong trigger lines literally means that your small triggers, the solid lines, have broken above and away from the large trigger lines, those dashed lines. And it's the separation between the two when they're both wide, angled in the direction of the trend, not flat and lifeless, but wide, like a shark about to breach or like a dive bomber coming down. That separation between the small and the large lets me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is a phrase that you're going to hear in this classroom all day long. Odds favorable momentum is the absolute best scenario for buying Fibonacci support on a pullback on that smaller, faster chart, or for selling Fibonacci resistance on a pullback on that smaller, faster chart. And when you look at the large chart, they look like tails or they look like wicks. Next-gen users, you're going to pinpoint exactly where that tail is likely to continue, but you're going to use it on a refinement chart. Hey, P. Hart, welcome to the room. Phonetics make me giggle just a little bit on your name. Glad to have you here in Nexgen. If you need anything, I'm Mark. Holler. Odds favorable momentum, guys. Smalls above the large are wide. They're angled in the direction of the trend. The market is likely to continue in the direction of the trend. Small below the large are wide. They're angled in the direction of the trend. The space between the two lets me know that I have odds favorable momentum. Guys, give me a Y in the room if you're cool with that one simple concept. Odds favorable momentum. When there's separation, and then when those smalls return to the trigger lines, when the smalls return, when they work their way back inside, guys, this is what we call weak triggers. This is anything can happen up or down. You give away your advantage of momentum. You literally forfeit a market that's likely to continue in the direction of the trend. And when those smalls return to the large, when they weaken the large, the market's telling you, we could go up, we could go down, who knows? You can try it, but we might reverse on you, right? So commit to the idea that momentum is an outstanding gauge to let you know that that market is likely to continue in the direction of the trend. And momentum should be the first thing that you look for on your large chart before you ever look for any other rules to be met. Momentum doesn't happen all day, every day, start to finish. We're going to start on the left, and I want you to see how the market flows, how it cycles, right? Odds favorable momentum pushes the market down. We end up with these weakened triggers, these anything can happen triggers. ACH is the annotation that you'll see a lot. Notice that it precedes a reversal, probably a fib somewhere down here. Market pushes back up. There's that odds favorable momentum. And there's one of those tails, one of those wicks. We don't trade the tails. We trade the pullback on the smaller, faster charts to get us into the move. And when we talk about entries, I'll show you how the two line up. But that odds favorable momentum, those next-gen users are getting in at the bottom of this tail and riding that wave up. Right up until we get anything can happen triggers again. And there's another reversal. The advantage of momentum pushes the market in the direction of the trend. Weakened triggers can cause a reversal, which may result in odds favorable momentum. And there's another one of those tails. A little bit of patience, guys. 90% of what you do during the day is going to be sitting on your hands waiting for the market to give you these advantages. What you're going to find is that sometimes your trigger lines don't agree. Sometimes they say up, they say down. Sometimes the trend is up and the triggers are down, guys. And it's these moments of indecision where the people that control the market are fighting. They are just duking it out. And this is where most people are tempted to predict what the market's going to do. Well, I think it's going to go up, but I don't have momentum, but the background's green. Or, well, my triggers are red, so I hope that it goes down. Guys, this is that consolidation. If you've ever traded the market and found yourself going long, then short, then long, then short, and nothing seems to work, rule number one can keep you out of a lot of those fights, waiting for that odds favorable momentum. Because eventually somebody's going to win. Somebody always wins. And they're going to give you that odds favorable momentum. So, guys, this is rule number one. It's number one for a reason. Momentum, it's going to hide mistakes. Momentum is going to push you to bigger wins. Momentum is going to carry you to that next level. Momentum is really the first thing that I look for each and every time. The next thing that I have to do is I've got to make sure that I've got a clear path. Look at that big fat red line that the market went to, guys. And look at it push down right off of it. Next gen users, you know exactly where these lines are. You know exactly where the market is likely to react, where it's likely to stop. And I'm going to show you the recipe for it. Because rule number two says termination conditions are false. You have not reached an area likely to stop the market. Rule number two says that you must have room to your profit targets. You have to have. Uh-oh. Snorri, have a good one. Thanks for a great week. Congratulations on getting funded this week. Hope you knock that other one out. I'll see you Monday. Enjoy your weekend. Rule number two, room to the profit targets, guys. We want to be able to make money. The whole idea of being a day trader is getting paid, right? The whole idea is that we put money in our account, that we buy nice things, that we spoil the people we love. Trading in determination conditions is a surefire way to not make that happen. So how do we identify termination conditions? Excuse me, I just swallowed a lot of air. Let's go to the user guide. Let's go to the instructions. Fibonacci tops and bottoms. Bank holiday Monday, really? Are the markets closed? That's perfect timing for me. I'm going to be road tripping. What's a termination condition, guys? A termination condition is a Fibonacci-based indicator that may stop the market. It's just a line on a chart. That's all it is. Don't overthink it. It's a line on the chart, and the lines on charts, Columbus Day, awesome. Now I have to listen to everybody complain about Columbus and how he's a bad person. These lines may stop the market. These lines are where the people that control the market react. If the market's going up, the buyers are in control. Well, when they reach one of these key areas, there's the potential for the sellers to try to take over. So you're going to be able to identify this, guys, and the lines are divergence highs and divergence lows. These magenta and cyan lines that print when the market is losing momentum at a pivot. When the market goes up to down and the momentum doesn't follow, this magenta line may print. When the market goes down to up and the momentum doesn't follow, the cyan line prints, guys. These are created by the price fluctuations, and they don't happen until about the third bar. Um, that's important when we talk about them as termination conditions. Red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1s, and also these mid bands in some cases on your large chart. All of these areas happen on the large chart. Good morning, PFI. All of these areas can be identified as termination condition by a really simple recipe. And two things happen to determine a termination condition. The first thing is that price reaches the area. And when I say price reaches an area, I mean those dynamic Renko bars. I mean these red bars, these green bars. This is just a reflection of price. That's all it is. Um, and when these dynamic Renko bars come down and in this case reach support, price reaches an area. Write it down on a piece of paper. Because if price doesn't reach the area, then the opposite side, the opposite force isn't reacting yet. They're waiting for you to get to their target. They're waiting for you to get to their entry, and then they're going to react, guys. Price reaches the area. All you have to do is ask yourself, where are my trigger lines? Where are those same trigger lines that provided me momentum? If you reach support and all of the trigger lines remain above support, you've reached a termination condition. This may reverse the market. It may create a bounce. You see it right there. Good morning, Sydney. Good morning, Dwight. Good morning, PFI. We don't know what's going to happen. I want you to accept that right now. You have no idea what's going to happen. But if price reaches an area and the triggers don't break, don't get it, don't hit it, don't get to the other side, guys, do nothing. Sit on your hands for a second. Wait for the absolute best of the best. This means that the area is likely to hold. It's likely to bounce. You don't know what's going to happen. So it doesn't provide you a clear path. The path is clear. Here we have price reaching Fibonacci support with all of my triggers above. When both your small triggers and your large triggers get to the other side of an area, we consider that area to be broken. Now the path is clear. So if I pull up my termination conditions, price reaches the area. These dynamic Renko bars reach the area. In this case, it's resistance, the other side of the coin. All of my trigger lines remain below. Therefore, I'm not going long into the area. I'm waiting to see if there's a reaction. I'm waiting to see if it reverses. I'm waiting to see if it breaks. I'm waiting to see if they just get real indecisive and bounce around the area. And this area is considered broken when both the small and the large triggers get to the other side. So this simple recipe, guys, we watched it on the S&P, didn't we? Price reached Fibonacci resistance. When it reached Fibonacci resistance, none of the trigger lines broke through. Therefore, absolutely no trades. Guys, this is uncanny. I'm going to show you why. I'm going to show you why we learn these patterns. From resistance, it pushed all the way to Fibonacci support. Absolutely no trigger lines broke through. Guys, there are no short trades. 90% of what you do is waiting for advantages. And now price is back to Fibonacci resistance, but all of my trigger lines have remained below. I'm still doing nothing until the area breaks. 90% of what you do is sitting on your hands. Price creates a pivot. The pivot loses momentum. That divergence line prints. Guys, this is not a termination condition because remember the simple recipe. Price reaches the area. Price reaches the line. When it comes back and reaches the divergence low, Debbie, send me 20 bucks, I'll get you one. When price reaches that low and none of the triggers break, now it's a termination condition. Now we're not going short into this area. This is called a pivot stop out. You'll see these all day long. Nexgen users know not to try to take short trades into this area because look what happens. The market reverses. If the market reverses, we're going to call this a strong bottom. And a strong bottom is the precursor for the highest probability trend trade that you can take. Debbie, no fib at 73. Mine is from a 21 range. It's also from a 13 too. Um, I did a full clean out at the beginning of the week. May have something to do with it. Do you delete your cache and tick every morning, Debbie? You do have the 21.3, but it's not coming over to the other chart. Are you on 8 or 7? You're on 8, right? You're on 7? 10 days back? You've got it, Ron. I've got it. 10 days back, Debbie? It sounds like you're the odd one out on this one. Maybe right click and reload that historical data, see if it gets it. And if it doesn't, one of the things that fixes people a lot, especially on 7, is you do have to disconnect to do this, but go Tools, Options, and go to your data. You do have to be disconnected, but oh, your days are off. They're different. That's going to give you different fibs for sure. But you can reset and repair data, and a lot of times that'll help out. Yeah, but if your days are different, then it's calculating from different. Uh-oh. You can hear now, Freddie? Hmm. If that ever happens, tell me, like ASAP. Like if it ever happens, like if you ever come in and it seems that I'm talking and I'm pointing and you don't hear me, just tell me instantly. Go, hey Mark, I can't hear you. Mic check. And then what you'll see is everybody in the room, if they can hear me, will throw a Y in there and you know that it's you. And if nobody throws a Y in the room, then I know that it's me. And I'll fix it instantly. But the cool thing is, Freddie, is it was the same thing as yesterday, right? It's going to be the same thing as tomorrow. So you can go back and check the video if you want to get those rules to reinforce them. But right now we're just doing termination conditions, right? Price reaches an area, no triggers break, no trade. Guys, how easy is that? This picture reminds you that 90% of what you do is waiting for these advantages. And I want you to see something. Don't those look similar? One just happened in the S&P. The other one is from a couple years ago. Is that awesome or what? Guys, we trade patterns. All we have to do is learn the patterns. Let me show you what happened here. Price came all the way up to Fibonacci resistance. Absolutely no triggers. Got to the other side. Nexgen users know not to go long. Nexgen users didn't lose any money on the short. Price pushed from resistance all the way down to support. Absolutely no triggers, broke through the area, therefore no short trades. Nexgen users are starting to wonder, how the hell am I going to make money if I can't go long or short? Well, support pushes all the way to resistance. Triggers below the fib is a term. Triggers below the divergence line is a termination. Triggers below the next fib is a termination. Guys, there's 3 termination conditions in one spot. You have a pivot stop out and you have 2 fibs. Well, this termination creates a reversal. You get odds favorable momentum, the path becomes clear, and there's that potential entry for the highest probability trend trade, and this thing goes off to the races. Guys, if you train yourself to stay patient here, right? 90% of what you do during the day is going to be reading your indicators and waiting for advantages. Accept it. 10% is going to be giving yourself a statistical advantage. 10% is going to be entering the market at the appropriate spot where it's likely to continue and looking for those profits. So guys, 90%. And I think it's amazing that this picture from 2021 is darn near identical to this picture from 10 minutes ago. You're going to see that all the time. When you begin to recognize these patterns, you give yourself an advantage. This one reminds us that no matter what the momentum is, if price reaches an area and none of the triggers break, sit on your hands, guys. Do nothing. Because you don't know what's going to happen. You don't know if the buyers are going to take over. You don't know if the sellers are going to smash through. You don't know if they're going to dance. And with all of this momentum, when price reaches those yellow one-to-ones, next-gen users know to do nothing, to sit on their hands, to wait for the advantage. Watch this. The buyers tried to take over. The sellers said no. The buyers tried again, and the sellers said no. Awesome, Debbie. The buyers tried again. The sellers said no. There's no reason to ever get caught up in this. There's no reason to give your money away when these guys are fighting it out. Ultimately, the buyers get both trigger lines above resistance. It begins to act as support. Eventually, the buyers create momentum. And there's that potential entry for the highest probability trend trade you could take. Guys, and is it just me? Or did that run 440? No, even more than that. That's almost $500 worth of profit potential. But all you had to do is get through the 90% without forming an opinion. Guys, this is your recipe for termination conditions. Termination conditions happen all day, every day. The easiest money, look at that S&P. My goodness, this is exactly like the manual. I can't even believe it. Resistance to support to the second level of resistance, and there it goes. There's odds favorable momentum. Smalls and large are below the area. Guys, there's one of those potential entries. This is where next-gen users make their money. The cool thing is it looks like if you miss that one, they gave you another. This is where next-gen users make their money. This is your highest probability trend trade, guys. When we talk about entries, you're going to be absolutely floored when you see just how effective having odds favorable momentum and a clear path can be. So triggers reach, or price reaches, no triggers break, sit on your hands and do nothing. Small and large get through the area. Guys, it's go time. Look for odds favorable momentum. Look for a clear path. Amen, DSO. Amen. Miss Debbie showed us a picture yesterday of adding into positions. Oh, it's amazing. Debbie, you should share that picture again today. It was outstanding. So guys, let it be simple in the beginning. Let it be either a clear path or not a clear path. Give me 20 days of embracing rules in their most basic form. Because eventually you're going to get to the medium probability trade. And that's areas with the potential to break. You're going to find that odds favorable momentum can break areas. Strong triggers break things. I'm putting that on a coffee cup. And what that means is that when price reaches resistance and none of your triggers break, your job is to sit on your hands, to do nothing, to wait to see what the reaction will be. If the small triggers smash through with odds favorable momentum, notice that I say smash through. This area now has the potential to break. There's still probably going to be a fight, but because of the momentum, 69.80 has the potential to break. But guys, it's not broken, because both the small and the large haven't made it to the other side. This potential to break look is what we call a 50-50 look, guys. A 50-50 look means that 50% of your triggers made it through, 50% have not. It has nothing to do, absolutely nothing to do with your chances of success. It just means that the area has the potential to break. If you look for an opportunity on areas that have the potential to break, you are willingly and knowingly forfeiting, whoops, give me that picture, a clear path. 1/3 of the advantages that it takes to create a high probability trend trade are gone. Therefore, you're now looking at a medium probability trade. You're looking at a trade where an issue exists. And if you give up the advantage of momentum, guys, or I'm sorry, if you give up the advantage of a clear path, don't give up the advantage of momentum, right? Don't give up the advantage of an entry area. It's no longer high probability. And when you incorporate these into your plan, your win percentage will go down a little bit. That's okay. But this is your second scenario, guys. Areas with the potential to break. But I want you to keep it focused and easy in the beginning. Price reaches these yellow 1-to-1s. This is just like the manual too. When price reached these yellow 1-to-1s, we didn't know what was going to happen. But sure enough, it reversed the market. Next-gen users, your money happens in between termination conditions where decisions are not being made, where momentum is established. S&P is putting on a freaking clinic right now, and I hope you guys are catching some of it. So give me a why in the room, please. And guys, I'm talking to Dave's Trading. I'm talking to Freddie. I'm talking to who else is new in here? I'm talking to you, D-Soap. Is everybody cool with this? If price reaches an area, just sit on your hands. Do nothing. Don't give away the advantage of a clear path. It really makes your life easy, I promise. Sometimes the path is clear. Sometimes all the triggers get to the other side. Sometimes you have odds favorable momentum in a clear path, and that market turns from nowhere. Why? Shit, I don't know. Pardon my French. I swore I didn't mean to. You want to know why it turns, guys? Because this guy said I want it to turn. Because this guy that moves the market, this giant shark that's the big money investor, the institutional trader, this shark said, I'm sick of it going up. I'm going to sell, 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 and it's going to go down. And guys, we don't have any vote. We don't get a say. We're remoras. We wait for them to establish momentum. We wait for them to give us a clear path. And then we take our little chunk in the middle where it's nice and easy. So sometimes these guys change directions. This final termination condition is going to allow you to recognize this change on a large chart by utilizing a small chart. 3 divergences in the same price range. 3 of those losses of momentum in the same price range may terminate the trend, guys. This is the only termination condition that I respect on a smaller, faster chart. 3 divergences, tripping over my tongue. 1, 2, 3 cyan lines from a low, 1, 2, 3 magenta lines from a high may terminate the trend. It becomes even more powerful when those small triggers work inside of the large triggers. You guys remember that anything can happen look? It happens on every chart, every time frame. You guys went from odds favorable to 3 divergences and anything happened. This may terminate the trend. It becomes even stronger. More powerful still when your third divergence, your third pivot is higher than the previous from a low or lower than the previous from a high. Guys, you're going to see this on the smaller, faster chart because 1 bar on the large chart is about 15 to 30 bars on the small chart. So we can use this look at a low or this look at a high to identify when change is happening on a larger chart. And if you see 3 divergences down here, no more short trades. And if you see 3 divergences up here, no more long trades. And here's the cool thing, is when you start incorporating medium probability trades, when you enter at the absolute best of the best spot, you'll be able to use divergences to help you manage your trades, even on the high probability trend trade. If you have the best entry and everything says down and 3 divergences print, you know to take your money, get out, and wait for the next best opportunity. So guys, these are termination conditions. And I want you to see Debbie's. D-Soap, just because you said it, this was Miss Debbie's chart. Termination up top creates odds favorable momentum, gives her a clear path, and she took 3 entries all the way down. And she got paid all the way down. And it all revolves around everything agreeing. So, look at that. It just keeps going. Where are my advantages? We have talked about momentum. Giving yourself the advantage of momentum, giving yourself the advantage of a market that's likely to continue in the direction of the trade. This happens on your large chart, guys. The large chart defines direction, momentum, and then the large chart is going to define your areas, those termination conditions. those areas that may stop the market, that may reverse the market. We haven't gotten off the large chart yet, guys. We've waited for the advantage of momentum and a clear path. And then when we have it, let's go make some magic happen, guys. We're going to go to the smaller chart, the faster chart, the refinement chart. And what we're going to do is we're going to take that one bar on the large chart and we are going to whittle it down to 15 to 30 bars on this smaller, faster chart. This one bar that's circled in black, the bottom of the bar is the beginning of a pullback, a small retracement in price counter to the underlying trend. The top of the bar happens to be a pullback to resistance inside of favorable large triggers. This circle, next gen users, brand new people, demos, you're going to be able to identify this area before it ever happens. You're going to be able to wait for the market to come to you, and you're literally going to enter the market when the large chart says down while your small chart is coming up. And it's pretty cool, a little terrifying in the beginning, but it works out well. And we're going to do that by using a limit order. We're going to wait for the market to come to us, and we're going to use that limit order at an area. All high probability trend trades happen from areas. All medium probability trend trades happen from areas. And those areas can be Fibonacci support or resistance. They can be yellow one-to-ones or mid-bands. But the key is we're going to make sure that those areas are inside of favorable large triggers. Your favorable large triggers, guys, they're moving averages. And the market loves to correct to a moving average. And when a market corrects to a moving average and we have Fibonacci areas inside, it's like throwing a tennis ball against a brick wall. It creates a place for a bounce. It's that point where the market is most likely to continue. So I want you to embrace the idea that when your large triggers and your synthetic triggers on your smaller, faster chart are one on top of the other, they are so consolidated and concise, like two snakes riding piggyback. This is going to give you your smallest window of opportunity. Your smallest window of opportunity is going to create the least amount of risk in a trade. Next gen users, you manage your risk before you ever manage profits. And you do that with the advantage of momentum. You do it with absolutely nothing in your way. And you finally do it by entering the area at the point where it's most likely to continue. And you do it inside a favorable large trigger, so there's the smallest amount of risk. So we're going to piece these three things together, and we're going to find an entry. When the large chart says up, when the large chart says that the path is clear, this should be the look on your small chart, guys. You should have strong triggers. You should be identifying areas, fibs, mid-bands, yellow one-to-ones, because these are where the bounces may happen. You should be making sure that you have favorable large triggers. Both the large, the smooth, and the synthetic, the stepped, are one on top of the other. And in an uptrend, they're like a shark about to breach, right? There's a seal right about here, and they're coming up, about to break the surface. Or in a downtrend, they should look like a dive bomber, going down, kamikaze. So everything says up. You've identified your areas, you have your trigger lines, and now what we need to have happen is that pullback, that little retracement in price counter to the underlying trend. The large chart said up. The large chart said momentum. The large chart said nothing in the way. The large crowd wants this thing to finish the move up. The small crowd, the yahoos, you people that hate money, are going to fight that large crowd, guys. We rely on these guys. They force a pullback. They force that tiny little retracement. That tiny little retracement starts with a reversal bar. This is your patience piece. Waiting for the reversal bar, not getting that fear of missing out and just jumping in. At the time of the reversal bar, you're going to look at your favorable large triggers, and they're coming up as this market's coming down. And you're identifying the areas that may fall within. Fibs, mid-bands, yellow one-to-ones. Next gen folks, I keep saying next gen users. I think my brain is stuck on that. You guys are going to create your window of opportunity. For a long trade, your window of opportunity is going to go from the highest point of support. I'm going to show you a picture here. From the highest point of support to the lowest point of support inside of favorable large triggers. For short trades, from your lowest point of resistance to your highest point of resistance inside of favorable large triggers. Sometimes it might just be one line. Sometimes it may be a larger window. So you're going to identify your window and you're going to activate a limit order right at the top of that window. Because we have odds favorable momentum on the large chart, because we have nothing in the way on the large chart. We're not going to try to save a couple pennies. Right click on your chart, activate a limit order right at the top of your window, and then wait. At this point, you're powerless. You have no control over whether or not you get a trade. The only thing you're in control of is the idea that on your large chart, you had odds favorable momentum. On your large chart, you had a clear path. Notice how I keep circling back to advantages. On your small chart, you waited for a reversal bar to signify the beginning of that pullback. You identified your favorable large triggers from the top of the triggers to the bottom of the triggers, and then with that identification, you refined it even further from the highest point of support to the lowest point of support, and you said to yourself, this is the area where the market is most likely to continue. This is the area where that bounce is most likely to happen. This is the area where that bar on the large chart is going to look like a tail. All you had to do at this point, guys, is right click on your chart and activate that limit order right at the highest point, 2 or 3 ticks above. This is your high probability trend trade, guys. This is the best of the best. This is the trade that typically wins 70 to 80% of the time, the trade that creates confidence through the memory of success. Let's talk about some trading realities, guys, because I'm not afraid to talk about the dark, ugly side of trading. I'm just kidding. There really isn't one. Your entry is here at the top of the window because of the momentum and the clear path. But it's a window, it's an area. I want you to be mentally prepared on day one that it may go past your entry, that you may see red numbers, you may see negative equity. But as long as it's still in that window, I want you to hold fast. I want you to say, I still have the advantage of momentum. I still have the advantage of a clear path. And I'm still in the area where the market is likely to continue. Guys, don't get freaked out by fluctuations on a small chart. It's a small chart. But here's the cool part, is we know where the market shouldn't go. We are so darn good at creating this window, at understanding where the market is likely to continue, that we also know where the market shouldn't go, and it shouldn't go outside of that window of opportunity. So we're going to have a stop waiting for it. We're going to have our protective stop beyond the window of opportunity, maybe 3 to 4 ticks beyond. Give it a little breathing room, right? But if the market comes down and hits that stop, you're out of the trade. You just took a loser, but you managed your losses with the protective stop. This is where you have to remind yourself that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. And I want you to think of it as a cost of doing business. This is rent on your storefront, right? This is paying dues to the country club. It's just a cost of doing business. Small losses are a normal part of a positive equity curve. I love that phrase. The idea is that you're going to spend the first 20 days focused on this best entry. You're going to spend the first 20 days developing trust in the methodology, taking picture after picture after picture, studying the patterns, giving yourself trust. You're going to eliminate all of the distrust. So much so that every time this sets up, you're going to take it. 1,000 out of 1,000 times, you're going to take this trade because you believe that 70 to 80% of the time this is going to be your result. You believe, you've proven to yourself through study, through repetition, that 70 to 80% of the time, good morning, Ace, this is going to be your result. And the cool thing is not only did you manage your risk outside of the window of opportunity, but once it starts to do what it's supposed to do, you're going to reduce it even further below a reversal bar, above a reversal bar. And you're managing risk before you ever manage profit. But that odds favorable momentum, that clear path, more often than not takes you to the next key Fibonacci area. Guys, this is the best of the best. This is the trade that I want you to spend 20 days focused on, that I want you to do nothing more than embrace the advantages, right? Learn how to enter the market where it's most likely to continue. And don't worry about anything else. Don't worry about the money. Worry about the process. And let's talk about those tails. We don't trade tails, guys. We can't trade tails because the tails are on a slow chart. I want you to see where I circled these tails with odds favorable momentum and a clear path. And look at where they showed up on my smaller, faster chart, on my refinement chart. Oops, I circled past them, sorry. Oh, it's because that's a micro ES. Get back to those circles. Pull back to resistance inside of favorable large triggers. This one didn't quite make it. You might not have entered on this one because it didn't quite make the mid-band. But guys, this is your best of the best. This pattern happens every day. You can literally open up your large chart and you can gauge how many potential trades there were during the day. Because when you see odds favorable and you see a clear path, whoops, that's not a circle. Circle it. And then when you circle it, go to your smaller, faster chart and see if it fit the rules. And if it did, take a picture. Let's see if I move this circle over to these tails. The second tail has odds favorable, and it hasn't reached the area yet. But I didn't have areas inside of favorable large triggers, guys. This is what we say is not your money. Your rules weren't met. But you can do this all day. How many opportunities? I know, Chris, right? I take allergy medicine here, and it dries me out. Opportunity to get paid, all the way down to the termination condition. And if you scroll back, there's another one right there at 907. The smalls are outside of the large. We've cleared all the areas, but we haven't reached the next one. Let's see what it looks like. Did anybody catch these? Oh my goodness, to the tick, guys. Area inside of favorable large triggers. So let's do an entry together. Do you guys want to? Brand new users, I love it if you play along here. Excuse me, my goodness. Everything starts on the large chart. So let's start with this one. Dave's trading, Freddie. Is Charles in here today? No. DSO, what direction is the market trending on my large chart on this most current bar? Are we in an uptrend or a downtrend? This is the most important thing that you can recognize, right? We're an uptrend because the background's green. So once I've established that we're in an uptrend, all I'm doing is looking at this chart. Are my small triggers still outside of the large? They're returning, but they're still outside of the large, right? So we're at the tail end of momentum, but I still have momentum. Give me a Y if that makes sense. That's the best look. This is the tail end of the look, but that's still a great look. And then you have to ask yourself, did the top of the bar reach an area? Did price reach that divergence high? And this is where you're tempted to say, it sure is close, Mark. I'm not sure if I can make money. But has the dynamic Renko bar reached that divergence high? If it hasn't, we have a clear path. We have room to the target. And I'm going to show you how this 2 points, this point and a half, turns into a manageable trade. Because when we have odds favorable, when we have a clear path, when we're trading with the trend, this is the look on the small chart. Everything says up. My synthetics are up, my large are up, they're overlapping. I'm looking at yellow 1-to-1s. I'm looking at a mid-band. I'm looking at Fibonacci support. I know that I want to take a trade. I know that I want to be in this market with all that momentum, with that clear path. But my small chart keeps going up, and it keeps going up, and it keeps going up. And I'm like, man, I'm never going to get paid. This is the worst day ever. How am I going to get that new house if the market never pulls back? And then they give us a reversal bar. And at the time of this reversal bar, here's your chore. From the top of the triggers to the bottom of the triggers, this is where the areas have to reside. This is where that bounce point, that area where the market is most likely to continue is going to be. But it's not the top of the triggers. It's the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. This is the recipe for entries. Give me a Y if you're with me. The reversal bar prints, and I know exactly where that market is likely to bounce. So much so that I'm going to activate a limit order, and I'm going to put it 2 or 3 ticks above that area of support, right? Because this mid band is a moving average. It's coming up. So I'm going to go 2 or 3. I'm going to kind of lead the passer and watch what happens. As the market comes down, see how the mid band comes up? So I'm still above the mid band. I want to make sure that I don't miss this trade with all this momentum. And the market comes down, and sure enough, we're in a long trade at 42.55.50. It hits my entry. It's right there, right at the area inside of favorable large triggers. Guys, I'm in a long position. I'm in a long position with the advantage of momentum and a clear path. And I'm in a long position with the advantage of having entered at the area where the market is most likely to continue. Here's the best part. My stop's outside the window. It's like, I don't know, 2.5 points. We're in the market. We're powerless. Either our stop gets hit or the market gives me a reversal bar. Here's my favorite part about buying the pullback. Now my stop is 2 ticks below the reversal bar, guys. This is your entry. This is your stop. Has anybody that's new to Nexgen ever had a trading methodology that gives you so little risk with so many advantages? And now we're just either going to hit targets or we're going to get stopped out. Let's see if that momentum carries us. That was our first indication of a slowdown, guys. 7 points later. And here's the magic. You ready? How do I study this, Mark? Whoops. That was my bad. Let's go back to that green box that we made. What time was it? At 9:10? That green box that we made? Well, it missed it because of the adjustment. Let's put a circle on the tail. Guys, you can study like this. Circle the tail. Look where the circle shows up on the smaller, faster chart. This is your recipe for the high probability trend trade, guys. This is the best of the best. So what you need to do is scroll back and find those tails with the rules met. Practice visualizing the rules. And then I want you to annotate your charts, guys. I want you to go through the effort. And I'm going to tell you right now, the people that literally write the words out, that put rule 1, odds favorable momentum, yes, you're verifying that you're following your rules. But even more importantly, you're drawing an arrow so that you know exactly what that rule looks like. And what this does for you is it creates recognition. Recognition makes it easier to recognize it in the moment. Rule 2, clear path, no terms, right? Whatever you need to put to let you know exactly what it is that you're looking for, and then an arrow. This is me not hitting a line. This is me having a clear path, room to the target, right? Well, that's the wrong arrow. It was the top of that bar. And then I think this is the most important one, and this is the one that people avoid because it takes all of 8 seconds to type it out, is I entered on a pullback to an area inside of favorable large triggers. Guys, if you get in the habit of writing that every time, I entered on a pullback to the area inside of favorable large triggers, what happens is it trains your brain to looking for areas inside of favorable large triggers. It trains your brain. It reminds you that this is where the least amount of risk happens, that this is where the greatest profit potential happens. Because guys, even if 61 was your target, that divergence line, that's your trade. Because you waited for the pullback, your risk was minimal. Because you waited for the pullback, instead of only having a couple ticks to that line, look at how much room you had to your target. Guys, the software works. The rules work, the methodology works. The only thing that you need to do is get that repetition. Get those reps in. Get that experience so that you can catch it in the moment. And this is the first hour every day, guys. This is what I do every day. Talk about the exact same thing every day. I talk about the advantage of momentum, the advantage of a clear path, and the advantage of an entry area. And then I give you a checklist. So, my new users, here's your high probability trend trade checklist. This is a trade that typically wins 70 to 80% of the time. This is a checklist that I've never had anybody follow and do worse than 70%. It reminds you that you need a good top or bottom to have that highest percentage. You need a termination that creates a full reversal. Watch this video this weekend. It'll change your life. It reminds you that you have to have odds favorable momentum on both charts for the best chance of success, that you need no termination conditions in an area inside of favorable large triggers. So I'm going to give you this checklist in the room right now. Download it, click and drag it over to your desktop. But these are the rules that you write on your chart. This is the annotation that goes on your chart. This is your focus for the first 20 days, getting into the market at the best of the best spot. For those of you that are visual learners, here's the exact same checklist. What does a good top or bottom look like? It's a termination that creates a full reversal. Put on your background, it helped you a lot. The rules on the background. Just knowing what you're focused on, right? What does odds favorable momentum look like? Here it is. And there's those anything can happen triggers. Here's your recipe for termination conditions, guys. And here's your how do I find where the market's most likely to continue. So for my visual folks, guys, this should be on your computer and you should study it every morning before you start looking for these entries. And then finally, dun, 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 look at that. It had the potential to break, but it didn't. Just saying. Guys, if you don't have a written plan, you don't have a plan. And if you don't have a plan, you're probably trading emotionally. You're changing your course based on what your gut tells you. Every successful trader that I know has a plan. Every successful trader that I know has a plan that maybe incorporates one or two trades. That's it. They understand that they don't have to get paid on every move in the market, that they don't have to catch every swing, that they don't have to be in the market every second that the market's open. What they do is they wait for a statistical advantage, they take their profits, and they get the hell out of the market. This plan's designed as a stepping stone, guys. This is the first part of your path. This is me providing you a written plan, something to follow so that you don't get sideways in your journey, so that you embrace the idea that it can be simple. And this is going to optimize your chances of success with the high probability trend trade, as well as that first medium probability trade, that 50-50 trade. Through simulation, study, class feedback, and participation, you're going to craft a plan that's tailored to your needs, guys. You're going to come up with something that suits your risk tolerances. You're going to come up with a plan that embraces your strengths. You're going to come up with a plan that is your plan. But until you have the experience reading the indicators, until you become a chart reader, until you begin to recognize these patterns, here's your best chance of success, your simple plan for consistency. Never fight the large chart triggers or direction. That's the easiest way to keep yourself on the safe side of things. Define your entry first. 20 days on entries, guys. 20 days of mechanical entries. 20 days of insisting that your rules are met before you enter the market. Taking pictures every time the rules are met, whether it's through historical study or whether it is in the moment on simulator, guys. Taking a million pictures, making sure that you know exactly what it looks like. Recognition through repetition. And then once you enter, well, we have to do something with it, right? The goal is to make money. Money is a result of the process, guys. The entry is the beginning of the process. The management is the second part. But management is based on great entries. So that same mechanical entry, that pragmatic approach to management tends to be the most straightforward approach for new users. Everything revolves around a great entry. Everything revolves around getting in at the area inside of favorable large triggers. Your stop goes outside of the window where the market shouldn't go. Um, and there's nothing for you to do at this point. You've entered the market, you've given yourself the best chance of success, and you're either going to get stopped out for a loser, and you're going to remind yourself that you had that statistical advantage, that you had the best chance of success, that this is only a cost of doing business, and that these small losers are a normal part of a positive equity curve. So you're either going to get stopped out or the market's going to give you a reversal bar in the direction of the trade. And if it does, you're going to be able to reduce your risk a couple ticks above that reversal bar. It's either going to hit your reversal bar. We're not going to move it all over the place emotionally. We're going to keep it if then, very pragmatic. If I get a reversal bar, then I reduce my risk. And at this point, there's nothing for me to do again. I'm either going to get stopped out or my first target's going to get hit. And guys, this first target is only $100 in the distance. It's only 10 ticks on crude oil, right? It's only 8 ticks on the S&P. But this $100 is a victory. This $100 is success. And confidence comes from the memory of success. This $100 is in your pocket. Your heart slows down. Your palms start to dry up. This $100 is yours. And it feels good. You would never turn somebody down on the street if they said, hey, here's $100. So take your $100, whoops, and move your stop to break even. You can eliminate 100% of the risk on the trade, and you get paid. And the whole idea for this quick payment and no risk is that it allows you to trust the large chart. It allows you to embrace the momentum that got you in. It allows you to embrace the clear path. And it makes it easier for new users to hold for the second target for that $200. You've been paid, you have zero risk. Roll back 6 feet and see what happens. And I'm going to tell you, a lot of the times, you're going to get hit on that stop. And it's going to be a break-even trade, and that's okay, right? Because you're taking pictures and you're developing your management plan. But and you're sticking to the plan. Amen. But until you can read charts in the moment, it's better to get paid, maybe get hit break even sometimes, and sometimes you're going to get that $300 winner on 2 contracts, guys. And $300 a day, if that's your only trade, that's a $1,500 week, guys, and that's a $6,000 month, and there goes your $72,000 year. From super simple, very pragmatic, very focused on all of the advantages, from being 100% rules-based and mechanical on your injuries, initially being 100% rules-based and mechanical on your exits and your management, and then through simulation, study, class feedback, and practice, you're going to craft a plan that eventually has you changing your management plan. Maybe you don't go to break even so quick. Maybe your second target isn't $200, but rather it's $500 at the fib where the market's likely to go. So guys, here's your simple trading plan. Study it this weekend, embrace it. We have an awful lot of traders this week that have found funding in these prop firms that are now trading with $50,000 accounts that belong to somebody else from embracing the idea of simplicity. I give this plan to you every day. You're going to be inclined to break it. You're going to want to have more moves. You're going to want to have more trades. But I can tell you through experience, the people that keep it simple are the people that are finding success. The people that don't deviate, that embrace advantages, these are the people that are finding success every day. So this is the first hour of class, the first hour and a half of class, guys. It revolves around advantages. It revolves around you embracing the idea that simple works. It revolves around you, Dave's Trading, Freddie, D-Soap. Who else is new in here? Here's what I want you to do. I want you to say, Mark is full of crap. This is absolute BS. It'll never work. There's no way this methodology has any weight to it at all. And then I want you to do the work to prove me wrong. I want you to study it. I want you to go back and look for the rules to be met. And I want you to find out how often it wins and how often it loses. And I want you to commit yourself to make it your life's duty over the next 10 days to prove to me that I'm full of crap. Because if it does, I'm going to tell you right now, you and I are going to be hanging out a long time. Because there's a lot of people that show up here excited to disprove the next gen snake oil. And I'll tell you what, your plan kept you out of this long and you didn't take a loser. Your plan kept you out of this short. You didn't take a loser. But your plan might have gotten you into this short as you took a winner, right? And your plan got you into this short and you took a winner. So it's not whether or not it works, guys. It's whether or not you can work it, whether or not you can do absolutely nothing when there's nothing to do. I'm going to encourage you now. I'm going to take 5 minutes. I want you to post pictures in the room if you have them. I want you to ask questions in the room if you have them. I want you to be selfish and not worry about the other 31 people in this room. I want you to pretend like it's just the two of us and you have questions that need answering. I want you to ask them. I don't care what they're about. As long as it's next gen, I'm going to answer them. I'll be back in about 5 minutes. When I come back, we're going to get into the second hour. We're going to look at your trades. We're going to watch the live market. We're going to say that this is a termination condition and I'm not going short because it may reverse the market. It may create a bounce. Whoops, there's my untitled workspace. Let me get rid of that. And we're going to say in crude oil, that's a textbook termination condition. And I'm not looking for a short trade because it may create a bounce or reverse the market. And on the NASDAQ, oh, that's the S&P. Look how the termination condition blew you right past resistance. All you have to do is learn these patterns because once you learn the patterns, it gets easy. I'll be back in 5 minutes, guys. Post away if you have a trade. If you don't, ask a question. You guys are going to lead the discussion for the second half of class. I'll be back in a few. second half is all about your charts. The second half is all about what you see. The second half is all about your questions, guys. The Novak lecture is over. Now it's time for you guys to take control of this classroom. So I'm going to scroll up to the very top of the chat box for the day, and I'm going to start clicking on charts, and we're going to talk about it. If you have a question about a chart, if you have a question, it doesn't have to be your chart, post it in the room. But what happens is I go back and forth, back and forth, back and forth. So sometimes it takes a second. If I miss your question, let me know. Miss Debbie got us going, and Miss Debbie says that when there's odds favorable momentum and everything says up, guys, this is the exact same entry that we did as a class. Do you recognize it? This is the stuff that true story, it makes me giddy. Guys, this is the exact entry that we took as a classroom, the exact entry that we took bar by bar. And Debbie took it, and look at that, she got out at 61.50, right where the market was likely to go. How outstanding is that? Does it work? Damn right it works. All you got to do is be able to recognize it. All you have to do is get that repetition. Debbie, beautiful trade. And guys, I want to say something else. And I always feel like I put Miss Debbie on the spot. Every stinking trade that she takes looks exactly the same. Every trade that she takes revolves around odds favorable, revolves around pullbacks to areas. Guys, every trade that she takes, it's repeatable. It provides a statistical advantage. And I'll tell you, she is crushing the game. Nice job. All right, Tony's got us next. Tony says termination. Dual divergence. All right. That's a lot of faith with all the triggers up. I know you have reasons, Tony, and it looks like it worked out, and you took quick profits. Taking advantage of termination conditions, guys. Taking his ability to read charts and turning it into a trade that suits his needs. That's all it is. Is it a high probability trend trade? Gosh, no, not even a little bit. But it's Tony taking his ability to read charts, his ability to recognize what's comfortable to him, and turning it into trades, capitalizing on those moves from tops and bottoms, using termination conditions to give himself an advantage. And then there's that one that Debbie posted. There's the same setup, right? Guys, this is the exact same trade going the other direction. Trend trade, trend trade, trend trade. She just kept adding on. She's like, I want more money. So nice. And then Ron does the same thing. Ron says, you know what? I love momentum and I love a clear path, but you guys taking pullbacks, who has time for that? So Ron's found a way to jump in and jump out, take advantage of the momentum, take advantage of the look. He doesn't go for home runs, but this right here is a $650 trade, guys, in a matter of seconds. Based on chart reading, based on a clear path, based on momentum, based on all the skills that you're going to give yourself by focusing on the high probability trend trade first. 4 seconds. Not even a rodeo trade. Why, Dwight? Look at that. All the triggers below support. Everything down, and Ron finds a way to capitalize. You guys want to know a true story? Those of you that are like, ooh, I want to take that trade, I'm going to tell you right now, I got slaughtered on this trade 1,000 times. 1,000 times. I had to simulate this trade for about 3 months before I started getting comfortable with it. Don't try it at home. If you're not comfortable in the moment at a second's notice, these trades are difficult. They really are. He makes it look easy because he spent months studying it, because he's got a year, in 7 days, he's 1 week shy of a year with Nexgen. He's developed his plan through chart reading. I took one of these yesterday. I had to send it to Ron. I was like, you're going to be proud of me. I did it. I finally did it right. This is great. You don't need it yet. Learn how to read your charts. And then once you learn how to read your charts, everything gets better. Tony, everything says down, you go long again, and it hits your target. I like this one better, Tony. Not that it matters what I like or what I don't like. This one seems early. That one seems easy. This one seems hopeful. This one says the market's told me. Um, and I noticed that this one didn't work out. But this one, when the smalls get above the large, man, it seems to change everything, Tony. Have you recognized that yet? When the smalls get above the large, it really changes everything. It really creates that advantage. Um, yeah, I appreciate you trusting the fibs that much. Hey, what's up, John Novak? And Dwight, when the triggers are inside, it is a sign of weakening, right? Which is another reason why Ron's trade can't be your trade. Because there's more to it than just that. You're right, that's not odds favorable, but it's still giddy up. He's got looks. Awesome, John. Have a great day, man. Enjoy your weekend. I'm sure I'll talk to you. So, Tony, I love smalls above the large, man. I think it's a great patience piece, and it just kind of gives you that little extra giddy up. And then, Ace, you took one trade yesterday. You took 50-50. The smalls are up, the large are up. We're hoping that this area breaks with multiple divergences. There's only two divergences. Weak triggers. How did this one turn out? Did it go up? I love after pictures. Oh, there's a second one. I'm sorry, I didn't see the second one. Are there two pictures on this? Oh, this is the old double picture. All right, hold on one second. There it is. Took a chance on the terms, took the perfect entry, and it allowed you to get money. Nice job, Ace. It's funny when everything says up, the market tends to go up. And when everything says down, the market tends to go down. Right? Paul, 50-50. Couple divergences, fibs everywhere. And you're out way before you're outside of the large triggers, right? Small risk. Notice how it's 50-50, not only on the one-to-ones and the divergence low, but also support. That's three areas that you're hoping to break with divergence at the outer bands with weak triggers. I love 50-50 trades, but sometimes they have to sort themselves out. Now here's one where everything's pretty much smashing, and then the third divergence prints and you say not trading in determination conditions. I like it. And then Paul, 50-50, no divergence from the good bottom. Love everything about it. What a great looking trade. You already get paid at the trouble spot. Nothing to risk, and let's see if that one runs off to the distance. Nice job, Paul. That's the easy one, isn't it? That's the advantages everywhere trade. Manpreet, good morning. Same trade, 50-50. Everything says go. No divergence. Manpreet, not a clear path, right? It's a 50-50. It is 50-50. The large triggers are below. The small triggers are above. The momentum is outstanding. The path is up. You're coming from support, right? You had three divergences. You take the perfect entry. Manpreet, the only thing that I can say about this one, is let's take the lesson on stops, where the market shouldn't go, right? If this trade with the potential to go up, to the potential to break the area, if it goes beyond this fib, beyond this mid band, beyond these triggers, do you still want to be in it? Because at that point, you're way down here. Your window is all the way up here at 60.75. You're risking 5.5 points per contract, hoping that an area breaks. Does that make sense? That would be the only commentary that I have on this. I think the entry is beautiful. I love the look of the setup. I like 57 better. That would be the only thing, Manpreet. It didn't work out. All right, you want me to tell you why? Because the sellers took over. Because the people that are in control of the market wanted it to go down more than the people that wanted it to go up did. That's it. That's the only reason. It's nothing you could have controlled. But it turned around where? At the 53 fib. Right where the buyers were waiting, right? Isn't that crazy? Right at the termination condition? So you took it back. I like it. Let's do this one more time, guys. And I love this. Whoops. Let's just go big chart real quick. I want you to see something. Termination conditions, and this is a lesson really for the new people. Manpreet, you probably know this, right? Right here at this Fibonacci area, the sellers made a decision to take over from the buyers. The buyers were in control. The buyers had momentum. Everything set up. Nexgen users knew that right here at this red line, decisions were being made, right? Right here at this red line, we knew that there was the chance for a reaction. So none of you traded into this red line, I hope. And the reaction was very much the seller said, we want the market to go down. And when they got to this fib, look at the giant tail on the bar. That's the reaction. And then when they got to the one-to-ones, look at the double tails. That's the reaction. And there's the tail from the divergence. That's the reaction. And the sellers thought they were home free, and all that momentum pushed it a little further. And the buyers took over and stole their momentum. That's the reaction at the area. So guys, fibs are areas where reactions can happen, where buyers and sellers are making decisions on what they're going to do. The closer you are to fibs, the better chance there is of a reaction, right? This is why a clear path is so imperative. So right here, the buyers took their momentum and they were screaming, absolutely screaming to the upside, but the triggers said we're not through yet, right? We're not there yet. Which meant that there was the potential for the sellers to do the exact same thing that they did over here. Let's try and push it one more time. Let's try and make it go down one more time. And that's exactly what they did, right, Manpreet? Right to that line in the sand where we knew the buyers were likely to react, where they stole the momentum last time. And that's where the market continued up. So guys, fibs, termination conditions, are the areas where decisions are being made. And let's go back to let me go back to the S&P real quick. Do you guys remember how easy it was in between the decision-making areas? Guys, this is what rule number 2 does for you. Rule number 2 keeps you out of that fight between buyers and sellers. It keeps you from hoping that resistance breaks. It keeps you from hoping that support breaks. And it says, there's no areas for decisions. Guys, these fibs are amazing. And these are the easiest trades that you'll ever take, away from the areas with the clear path. So great picture, Manpreet. I absolutely love it. And I think that there's a lot of great information there. And it's an awesome segue to just how easy it can be when you stay clear of termination conditions. There's a good example. Out in the middle of nowhere, John Novak takes his entry. And I'm sure that there's odds favorable momentum on a large chart. Look how easy it is, guys. Everything says up, right from support inside of favorable large triggers. Easy peasy of the lemon squeezy variety. Paul, strong trending market, didn't get you, right? Didn't make it. It happens sometimes. Not your money, Paul. John Novak, oh my gosh, a pullback to support inside of favorable large triggers. It's like I don't even know you anymore, John. Is it just me, or does the owner of the company, the guy that wrote the software, the guy that created the plan that I teach every day, is it just me, or is he entering at pullbacks to areas of support inside of favorable large triggers? There may be something to the idea, even with 25 years experience. This one pulls back. When it goes beyond the area, John says, let's get a little confirmation. Looking for the next one. Nice job, John. And then last picture, Paul, there's that 50-50 with divergence again. Quick profits. Did it catch your second one? I hope so. Guys, that's Nexgen. Rinse and repeat. Rinse and repeat. There's that 50-50. There's divergence. Divergence pushes it higher. No need to get fear of missing out. It went to a higher area and went because it's fighting this HVA line now and has a good chance to go the other way. Already got your target. Don't be greedy. I like it. And look at that. Divergence kills a 50-50, right? Nice job not taking it twice, Paul. See, I told you. Smarty pants. John says there's 3 trades, trend trades, and 2 others we teach. All you need. Make money with trend trades first, and you can add later after your tolerances and skill levels come up. But trend trades are all you need. The others are gravy for years 1, 2, and beyond. Hallelujah. Good stuff. Three divergences, wonky triggers, it's all ugly. You don't have to be a part of that. 50-50 with divergence. All my KISS plan traders avoided that one because it lacked statistical advantages. Paul took his ability to read and turned it into money. PFI, are you not annotating charts anymore? 50-50 doesn't work. 50-50 to the upside. You take your quick momentum trade. After the higher divergences, clear path, taking a little snippet. It's hard to tell where you're doing what you're doing here, but it looks like you let everything clear. Oh no, you traded into the area. Fear of missing out long. I think we're going to start labeling them that. FOMO long. 813. Hold on. These don't even match. It's difficult for me to give feedback, right? It's difficult for me to give feedback if I can't line them up. This happened at 813. 813 is, I don't even know. It's not even on your chart. There it is. It's all the way down here into every termination condition you could ever hope for. Yeah. And when you get away with it, all you're doing is you're teaching yourself that luck. I saved this. I'm reading a book. I'm actually on my 3rd reading for it. Okay, you only posted two. Guys, if you don't follow your rules and your trade ends up being a big winner, you're most likely going to breathe a sigh of relief when it's over. But in reality, you shouldn't be relieved. You may have just made an error that will cause you to fail faster than any other trading mistake you could have made. And here's the book this is from, guys. My brother gave me this. You see, if this trade where you didn't follow your rules works out, then you'll be more likely to not follow your rules next time. Again, this is the worst mistake you can make. This will cause more damage to your trading account than any error that you can make. Same time. So guys, that's where that phrase long-term failure comes from. And then PFI, this one has momentum, clears the areas, and then you just jump out. I guess that's your target. 4 ticks, 80 bucks on 7 contracts. Not a bad little snippet. See the difference though, PFI? Clear path, man. Odds favorable. Guys, this is money. I love this trade, PFI. I think you did a great job on this one. How do you get to the point to where you stop trading into the nonsense and embrace the idea that it doesn't always have to be nerve-wracking, right? Because this one, not likely to win. This one's got a great shot. So nice recovery. Good job. And PFI, just my 2 cents. You're not ready to stop writing on your charts. The fact that you're breaking your rules and posting them in class lets me know that. You're not ready to stop writing on your charts because you're not following a plan yet. You're following your gut. Get in the habit of writing on your charts. Get in the habit of holding yourself accountable. And make it easy for me because when you do this, look at how huge that is. Like, look at how much information you gave me here. Man, show me? That's okay. Whittle it down a little bit for me. Look at that. How am I supposed to find this trade in here? Right? Clear path. This is the one where I think your large chart had it right. You hadn't reached an area, you had cleared an area, and you had odds favorable momentum. I don't know. I don't know your rules. Write them on the chart. Yep, to constantly act in your own best interest is my favorite. I don't know. All I see is that you jumped in, right? Why? Tell me why. If you can't tell me why, how can it be repeatable? And I'm not saying that you don't know, but doesn't it make sense that if you have a look that wins more than it loses, that you want to be able to do it every day? For example, odds favorable momentum, no terminations, pull back to resistance inside of favorable large triggers, and great googly moogly. That's the easiest trade Paul's going to take today. Freaking amazing. Paul's been with me for a year. I know exactly how Paul trades. I don't need him to annotate his charts so much, but if you're not consistent and killing it and know exactly what you're looking for, guys, you should be vandalizing the hell out of your charts every time. Tony, everything says up 50-50. You took a long trade into a fib with all the triggers below the fib, and then you let it clear and you hop in and you sit through all the divergences and go up with the momentum to the next target. I sure do like the trades on the right side of things better. That's just me though, guys. My brother will tell you I'm an absolute wuss when it comes to trading. I'm the most conservative trader ever. I don't trade in determination conditions. I try not to trade without momentum. I don't like fighting the trend. But the large chart leads the way. And then the small chart said pump the brakes. You notice how when you got long though, Tony? You're right at that decision-making area and the triggers are below it. That's where all of this comes from. That's what made it difficult, I think. Everything says down with momentum, and John, you take a pullback to resistance right there at the triggers. And John's got big split triggers there, so he's taking a calculated risk, right? John's trading into a mid band. Those large triggers are way up here. But he's saying because of the position of the triggers, because every chart says down, he's willing to take a shot after a pivot stop out. It's a little different. It's a little more advanced, guys. It really is. That's not a good looking trend trade. That's not favorable large triggers. But it works. It's also not from a good top, right? Which means this mid band might be a bounce point. You've already got two divergences. Notice that John's not willing to hope on it. It's either going to go down to that fib or he's gonna risk a couple. Yeah, I don't know that that's a good top. I'm glad that worked for you. Your large triggers haven't made it below yet. It's not coming from a fib. Guys, this is where 25 years pays off. I would never take this trade. It doesn't fit my plan. It fits John Novak's plan perfectly. And it's a wonderful chart read based on his experience and repetition. And he knew exactly where he needed to get in, and he knew exactly why he was getting in, and he knew exactly where the market shouldn't go for his stop. And I've learned not to argue John Novak's trades, just the same way I'll never argue your trades. But we will talk about advantages and whether or not they're there. And Paul, that one went the distance. Good. Shut it down and go play golf. Nice job, man. It looks like gold's good to you. Take the kids. Work. Ugh. I'll tell you what, man, I'm excited. I'm getting out of your time zone tomorrow morning. And guys, there's that bad top, straight to the mid band, right back up to those large triggers. You're in a holding pattern on crude oil. That's a great looking top. Debbie, I am coming to Texas. I'll be in Dallas Wednesday. My wife has panel interviews at Baylor Scott and White in downtown Dallas, and I think that's where we may end up. It's still between Austin and Dallas, but that's the job that she wants if they make an offer, when they make an offer. So we might be neighbors. Yeah, I was looking at the weather. Been there. What do we think? Great top, odds favorable, not the gap theory, area inside of favorable large triggers. Does this one fit anybody's rules on a 50-50? No divergence? Pretty cool. Pretty cool. Where's the window, guys? From the lowest point of resistance to the highest point of resistance. That's where the market's likely to continue. And that's a great termination that creates a full reversal. And that's odds favorable momentum. And this is the bottom of the window with absolutely no divergence. Paul says that's a sexy trade. You do have your stop right inside of the window of opportunity, though. Just throwing that out there. If it pushes to that highest point of support inside of favorable large triggers, you're going to catch it with your stop. Not telling you how to manage a trade, but it might push up a little bit. And sure enough, it did. But that was a good look on a 50-50. I'm sorry, Luciano. I never miss them intentionally, guys. Everything says down from the good top. You take the pullback to resistance inside of favorable large triggers, and you make some money. You do know that you were trading into that divergence low and you were trading into those one-to-ones, but because of the momentum, you said virtually no risk, let's knock it out. And you got it on the way down. I like this trick, Luciano. It's coming up, and you're like, it should go. Let it smack its head and work its way back down, and you catch it on the way down. That's some very in the moment management for a trade, without a doubt. All right, guys, that's the second hour. We made it through. You guys are doing great. Um, I'm going to take just a minute. I'm going to leave you guys with the market. Let's see if that resistance holds to the downside. It may not. I don't know. I'm not in control. I'm going to take a quick second, guys. I'm going to go refill my water. When I come back, the last hour belongs to you guys. It's either going to be a whole lot of questions or a whole lot of mic silence. You guys are in charge of that. I will be back in just a few minutes. I have to refill my water. So post them if you got them. Cool kids. Let's get back into the final hour here. So, go get in your biker duds. Remember, those chaps need to have a back end to them. We'll see you on Tuesday. Is the market closed Monday? Is that a holiday? I know it's Columbus Day. Are they trading Monday? Let's take a look. It is open? All right, thanks, Luciano. Then I'll be here. John Novak posting in the room again. At least he's going to keep me busy, right? Everything says up. He doesn't fight the small triggers on the NASDAQ. He waits for the close above. And there it goes. I like it. Nice trade, John. Direction, momentum, area, right there at the favorable large triggers. All right, I guess I'm going to go through my pictures and see what I have for you guys. All right, go lift something heavy. You have a great weekend. Hit them straight tomorrow. Guys, it's Friday and nobody's posting, so this is where I start to ramble. I'm going to warn you right now. The only way to shut me up is to post pictures. So, guys, to minimize your learning curve, the tried and true path. This is something John and I wrote one Sunday morning. We're sipping coffee on opposite sides of the world. But we are like, this is the truth, guys. This is what it's always been, and this is what it probably always will be. To minimize your learning curve, post pictures of your trades in class. Oh, did I miss one, Freddie? Ah, picking on the new guy. That's not cool. Let me go find it. I'm sorry. Thank you for telling me. There it is. So you had odds favorable, right? Everything's going up. Not quite a clear path yet, Freddie. Do you see how all your triggers are below the 1-to-1? So not a clear path. But you take the pullback right to support. On the way up, you hop in, and you're looking for that continuation. Just a little premature from a high probability trend trade standpoint. But the flip side of that is you waited for the pullback, which means that you're taking it and putting it all together, slowly but surely. And then, of course, there's no reason to have 24 ticks of risk. No, you're doing great, dude. So when this reversal bar prints in the direction of your trade, reduce that risk, man. You could literally be 8 ticks of risk instead of 25. That's over $1,300 saved in risk. Does that make sense? If you're gonna take this trade, yeah, get that reversal bar, man. Let's reduce a little risk. That's one of the great things about what we do. John says 25 years of Nexgen, nothing has changed. New traders try it their way until they give up and do it right. You have two choices. Do it right the first time or suffer for a long time and do it right later. Yeah, that's true. It's so true. So Freddie, great read, man. You're recognizing smalls above the large are turning. You're recognizing that up path. You're recognizing the pullback. It's just a little premature. But you have an awful lot of advantages, and we'll learn how to manage it. It's a great chart read. And then, John, everything is up and the path is clear. The area is up here, but the triggers were strong, so you get in on the close on the correct side just to make a little more money, just for the fun of it. I thought you were going to the gym. Saying the lies have to stop, Novak. Lies have to stop. And then large chart triggers are weak, so he took his money. Nice job. Nice job. I love it. Way to distract me, guys. Post your pictures of your trades in class. Every one of them, win, lose, or draw. The absolute best pictures that you can post are the ones where things didn't work out, where you made a mistake. Because we will have a conversation and get you pushed in the right direction. We'll celebrate all of the victories, but we'll identify the challenges and we'll work together through them. And you may have a short-term victory, but a long-term failure if you're winning and breaking your rules. We see that a lot. And I posted that little snippet from the book about emotion-free trading as well. Taking winners when the rules aren't met is one of the worst things you can do for yourself, guys, because you're telling yourself that it's okay to break the rules. Whoops, I don't know what I just did there. And you need to know the difference, and that's what we do, is we help you identify the difference. You get that feedback. We're here. I'm here 15 hours every week, guys, live in the market. All you have to do is post a picture. All you have to do is ask a question. We'll talk about it. And the idea is that you're on simulator, right? You're participating in class. You can't lose money. It's just you practicing, getting repetitions, making mistakes, correcting mistakes. You need to know what you did right or wrong when you're new. That really is the magic, guys. The software is the best software in the world. I firmly believe that. And the education just supports what the software is capable of. It teaches you to read the software. It teaches you to get comfortable, to build confidence. It's a proven path that's really based on all the mistakes. And practice, practice, practice. That's it. Repetition, guys. The only thing Nexgen can't give you is experience. That's the only thing that we cannot give you. And that's the part that you have to do for yourself. And it's going to be up to you whether or not you want to do it, right? Here's your path. Safia posted this earlier. I wanted to bring it back up. I love this picture. But this is the reality of trading. And Dwight, I'll be right to yours, man. This is the reality of learning to day trade anywhere with anybody. Is you start and it looks like fun, right? It looks like a good time. I'm going to watch stuff. It's like a video game. And then, Freddie, you had this on day one, right? Whoa, this is hard. This is a lot coming at me. There's a lot of information. I don't even know what the hell a trigger line is. And you're not sure what you're doing, but you're trying and you're practicing and you're getting feedback a little bit here and there. You're hiding your losers because they're embarrassing. Um, and you're like, I think I'm getting it. And then right around day 25, you're like, I'm amazing and I get this and I got it. And I'm going to open up an account with my kids' college fund because there's no doubt in my mind I'll be a millionaire by the end of the week. Um, Everybody does it, guys. Everybody does it. We forget to embrace the process. This is when you go live too soon. This is what I did. I went live too soon. I lost about 5 grand in 2 hours. This is it, Safia. I lost about $5,000 in 2 hours, guys. I took 22 trades and I have no idea what happened. I didn't have rules for entry. I didn't have rules for exit. I hadn't taken any pictures. And the sad thing is my brother wrote the software and taught the class, and I never participated because I was so embarrassed that I could take a loser and my last name's Novak, and what would the world think of me? True story. So I just said, I'm going to be an egomaniac and I'm just going to lose all my money and to hell with the process. And it was right there where I rapidly hit the I don't know shit stage. And I'm going to swear because you know what? We're all adults. If you don't care for it, I apologize. I don't know a damn thing. I don't know what, I mean, I was dejected. I was angry. I hated my brother for creating the software. I hated the market for taking my money. I hated my broker for the round turn charges. I hated, I don't know, you name it, and I hated it. And you know, the only thing that I didn't do is I never took responsibility as the person that was in control. I never took responsibility for my losers. I never took responsibility for my inability to study, for my inability to post pictures. I never took responsibility for not using the spreadsheet. I felt entitled, and the market reminded me that I'm not in charge. And guys, this is a very normal part, and it doesn't have to be that way. And that's why John says you can do it right the first time, or you can suffer and then do it right. I suffered. But it's right here where you make a decision whether or not you're going to be a day trader or whether you're going to be a guy that tried it once, but it's all bullshit because it doesn't work, right? Because you never took a second to actually learn it. But if you say, I know that it works and now I just have to work it, I have to follow the plan, I have to do what's required to get to where I want to be, then it starts to make sense. And then you start getting amazed at what you do, and then you did it. And guys, Nexgen can eliminate the first half of that picture. If you walk into Nexgen day one and you say, I don't know shit, so I'm going to embrace the path, right? I have absolutely no idea what I'm doing. So when Mark says, post your pictures in class, I'm going to post pictures in class, everything that I see. And when Mark says use a spreadsheet, I'm going to use a spreadsheet because Mark didn't and was liberated from his money rapidly. I'm going to learn the rules, I'm going to simulate, and I'm going to make sure that I'm always taking the correct trades before I ever go live, guys. You can eliminate the first half of this. And anybody that's gone through it and is here now, Safia, would it have been easier to get rid of that first half? It's possible. I embraced it. I probably went through the first half 2 or 3 times because I'm stubborn. So you don't have to, guys. If you do, it's cool. Do it on simulator. But if you embrace the idea that you can start right here and skip all this nonsense, embrace the path from day one, guys. I've got people in this classroom that have been trading with Nexgen for 3 weeks, people with no experience in the market that are already in funded accounts on those prop firms, people that are already making consistent money every day, people that are winning 70 to 80% of the time, and they're doing it through simplicity. And then I've got a lot of hard-headed people that remind me of me, that insist that they have to have more trades, that insist that they have to do the things that the guys with 25 years are doing, right? You don't have to, guys. That's me too. It's all of us. That's it. Wins create confidence. But what creates wins, D-Soap? Statistical advantages, right? And it makes taking that next trade that loses even easier. So, guys, the path has been the same forever. The looks have been the same. The rules have been the same. And human nature has been the same. So I'm going to drop this in the room one more time. And even if you think you are an absolute rock star, this will take you an hour and a half to read, maybe. Um, Unbelievable. I love this reads. That's it. That's it, D-Soap. So D-Soap, I'm assuming you have experience trading, right? You're coming to us to see how we can help. That happens a lot. I get people with a lot of experience. I get people that have way more experience than me. Guys, my only experience in the market is with Nexgen. I still get confused on what a bear and a bull is. It's a true story. People are like, the bears are tearing it up. And I don't know. I have to go look at a chart to see if that means up or down. I'm not sure. Um, I don't recognize technical patterns. I don't know what stochastic, what indicator, whatever they are. I don't even know, guys. My brother does all this stuff. My brother makes all these pretty lines. My brother makes these indicators. My brother wrote the rules. Do you know what I'm exceptional at? Reading the information. Thank you for that. I knew that there was a word that was something like that. I don't know what that is, D-Soap. Do you know what I have to do if I want to know what that is? I've got to open up my browser and I got to paste that word in there, and then I got to read a bunch of words that make absolutely no sense to me. But what I do know without question is that these are anything can happen triggers that tell me that the market may or may not go up. I do know without question that 3 divergences typically pushes it lower. I understand when the advantage is present, and I understand when the advantage has gone away. Because I just read indicators. I don't guess anymore. I used to. I used to guess. Cost me a lot of money. I used to hope it cost me a lot of money. You don't have to, guys. So let's talk about what you can do this weekend to make life easier on you. If you're going to study, so could the charts had a bias of the drop this morning? Could they have predicted it? Is that what you're asking? Let's look at the S&P. We'll do S&P from midnight. Let me scroll back. So DSO at 6:31 in the morning, the S&P had a textbook termination condition with weak triggers. That's what started the down move. That simple rule number 2 that said don't go long anymore. That's what started it. There's that odds favorable momentum. And it pushed all the way down to Fibonacci support, where it had weak triggers, created indecision, hit resistance to the tick, and then the sellers tried to push back down right to that blue fib. Look at the indecision. Buyers trying to make it happen. The sellers still won. Right to the next key area that creates a bounce. Buyers tried again. Sellers said go to hell. Right to the next key area where the fight ensues. The sellers win again. The buyers aren't done. Right to the term. And the sellers say, let's go down again right to the key area. And then if I'm not mistaken, that was your biggest push up, straight from a termination to resistance to support. Termination. There's your big push down. The buyers tried again. All we have to do, DSO, is find the advantages in between the indecision. Find the advantages in between the areas. So did the software predict it? No, the software is incapable. The software just tells us that when you reach resistance with anything can happen triggers and everything rolls, that's a hell of a good top. And that's what started the party. So can we say yes? Your chart reading would have recognized the potential of that market to drop. 4304 was the high for the day. Well, it went up to about 4305. It overran it by a point. So since it's Friday and I love stories, DSO, when John was creating the algorithms for the software 27 years ago, before he had clients, before he had anything, John had a friend that traded the floor. Or his whole job in Chicago was to know where the buyers were buying and know where the sellers were selling, to know where the key areas were. And of course, he couldn't tell John that because that violates a lot of laws. But what John would do is, as John was creating the algorithms, John was calling this guy with his numbers. John saying, hey, I have a fib at 42.95, right? I have a fib at 42.88. And the guy could tell him, that's 50 cents off of a key number. That's 25 cents off of a key number. And John knew that the algorithm was right when that was the consistency, when he started getting that one. And then from knowing where tops and bottoms may occur, look at this. 3 divergences in the same location. Third divergence is higher, comes directly from support. Guys, this is the Mac Daddy of termination conditions. Thanks, Sophia. Congratulations on a wonderful week. So John took his amazing fib levels and he said the levels themselves aren't enough. Just knowing that there's Fibonacci support or just knowing that there's Fibonacci resistance isn't enough. We've got to take a look at momentum. We've got to make sure, because areas break, that we really have the best chance. And he developed this methodology. and it's freaking amazing, and it works. And there's a lot of people that have had a lot of success in the market. How do you know where they were generated from? Great question. Let me share a picture with you. When you open your software, DSoap, your software measures, Manpreet, take care. Your software measures every swing in the market, not every super high, super low. Literally, kid you not, whoops, every pivot, every up, every down. And it doesn't do it just on a day or an hour or something like that. It goes back 10 days and it measures every swing in the market. And then it synthetically creates different time frames and it measures the swings there. And then it projects forward and it does alternates, it does retracements. And when it does it, these are all the lines from the calculations that your software creates. This is what it looks like without the algorithm in place. And then the magic is that it weighs them out. Which lines are the most important? Which prices have the highest concentration, the most important Fibonacci levels? This is the algorithm that John Novak created. So from all of this, your software creates these. And because areas break, typically with momentum, there's the addition of a couple other simple indicators to help you understand when they're likely to hold, when they're likely to break. That's rule number 2 coming into play. Does that make sense? That's what he does. I think it's freaking brilliant. Guys, I'm not going to lie. When you grow up with somebody, you don't understand how smart they are until they find their passion. Um, and he found his passion. And I remember John was a salesman for a software company at one point, and he had a client that every morning spent hours doing Fibonacci retracements, spent hours doing all of these measurements by hand. And it was one of those see a needs and fill it. John said, I'm gonna automate it. And he did. And he did it really well, guys. And he's been an industry leader for a long time. There's nothing like this. All you have to do is learn how to use it. So, I don't know. I get excited. I couldn't teach this class if I didn't think it worked. That's true. I trade it every day. My plan is the exact same plan that I talk to you guys about every day. My plan revolves around momentum and a clear path. So that's kind of how it came to be, D. So we try to keep it as simple as possible. I'm going to give you guys this video watch list. This is great homework for the weekend if you want to sit around and get ahead. These are a lot of videos that John's put together over the years, really, talking about good tops and bottoms. For you NASDAQ traders, there's some stuff in there. Trade example videos where he gets in, trailing stops, everything. Futures, stocks, guys use it to hedge their options. Um, so when our father retired from HP, he had a big stock package. He was up there. Um, and he was going to get rid of a lot of it, for retirement. He's like, I'm just going to sell some stocks, get rid of it. And he actually put HP stock on John's charts, or John did it for him. And he said, don't sell it yet. He's like, everything is pushing up and there's resistance right here. This is a better spot. And it was. And it was an awful lot of contracts that had a much better exit because John was able to recognize where the market was likely to go. Saw that big red fib in the distance, right? Saw it with odds favorable, momentum, and a clear path, and just took that entry right there at the mid band. So John's pulled up Tesla's, Apple stock. I've seen it used on grains. He's had cattle ranchers that hedge with it. Soybean farmers. Um, the patterns are the same. The patterns don't know what market they're on. The patterns don't know anything other than the market is cyclical. It runs on fear and greed, right? Entries and exits are all based on fear and greed. And the more pivots that you get, The more fear and greed is present, missed you again. It happens, right? But the fear and greed repeats itself, D. So over and over, over and over. It's pretty awesome. The chat, I don't think it ever goes away, to be honest with you. I've never scrolled up too much, but if I keep scrolling, that's today, that's today, there's yesterday. I don't know how far back it'll go, to be honest with you. So I don't know that it's archived. You'd have to search, but you can go to the Nexgen YouTube page. Let me get back to the bottom here. I just scrolled 3 days back. I can't see anything. Um, you can scroll back to the Nexgen software page and go to the live. And I keep them private during the actual classes. And then after class, I'll make it public. So there's yesterday's class in its entirety. It's actually 30 minutes long. I forgot to shut it down. There's the one from Wednesday. There's Tuesday. There's Monday. So the first hour is always the same, guys. The first hour is always rules. The second and third hour change every day based on your charts, based on your questions. And look at that. Right to the fib, guys. I can't make this up. I can't make this up. It just happened live right in front of you. Alex. Alex. No divergence. You take the first one. Beautiful profit taking. You gave a lot back, I feel. Just my 2 cents. Gave a lot back. When that divergence printed, it looks like you got out. Weak triggers. Took a shot from a good top. I think you did that as well as it can be done, Alex. Perfect entry. This is your trouble spot for sure. And man, it held twice. That's where it starts to feel like hope a little bit. You're welcome. Great entries create manageable trades, don't they? Has it been helpful? I love it because like we all have things that we need to learn, right? We all have these little things that just aren't clear yet. And when you go back and watch it, you catch it, right? There you go, Alex. That's what I'm talking about. Oh, Alex, you've been with me long enough, and you know I respect your trading. I'm gonna bust you up a little bit. You ready? Whew. All right, get your dukes up. Termination creates a full reversal, gives me odds favorable and a clear path, right? This is the holy smokes best of the best. I can't believe I just got this trade. How fortunate am I? That's the holy grail. So, Alex, just from a management standpoint, two divergences mean jack squat to me with this look. Two divergences might create a little dance, but the only way I'm getting out of this trade is if a third divergence prints. The only way I'm getting out of this trade, the only way is if three divergences print. Two divergences just tells me I have to keep my stop in place and do nothing. But when it looks like this on the large chart, man, they got to come get me. There's absolutely no way I'm throwing myself. What's that phrase? Throwing yourself on the fire or whatever. Does that make sense? When it's this beautiful, three divergences is a termination condition, and that's the only reason I would ever exit a trade like this. Your plan may be different. But all this lower divergence did is it just retested the same support that's been holding. That's a great management tool as you grow with the software, guys. And this is an idea of letting the large chart lead the way, building trust in it, and then remembering that this is just an entry chart. And until you get three divergences, when you have that clear path, that's a hold on. It's a great looking trade, man. Beautiful entry, every advantage. I love everything about it. I think that you're going to get to the point to where you hold that one a little longer as life goes on for sure. And then Paul, everything says up. Oh, you caught the perfect one all the way up to the fib, the one we talked about in class that I circled, said I can't make it up. Paul has the repetitions to catch it in the moment. Everything says up with weaker triggers. Luciano takes an entry. He says the path is clear, but the triggers are weak. Let me get in at the best spot, and let me make money right into that trouble spot. I think your management's pretty good. Weak triggers, pivot, stop out. There's no reason to hope, Luciano. Get paid. Wait for the advantages to come back, right? Get paid. Wait for the advantages to come back. All the money doesn't have to be your money. Ah, we saw that one. Paul keeps getting missed. Stranded at the drive-in. Feeling a fool. But that high probability trend trade sure worked out, didn't it? Beautiful. That's what we teach every day, guys. That's what we teach every day. Who is this? Daryl? Daryl knows it. Daryl, it cracks me up that you post twice a week. And when you post, you show me the most beautiful trades in the world. Like you trust it. Hey, Gary. How long does it take to trust? What do you guys think? Is it a week? Are you going to trust it in a week? A month? 6 months? You're just playing in the background. I love it. I hope everything went well, Gary. Great trading, guys. So, DSO, your goal. Dave's trading, your goal. Whoever else is new in here. I know I have a couple of you. Your goal isn't to be a professional day trader with Nexgen in the first week. Your goal is to see that it works, right? To see that we have a methodology in place that creates a statistical advantage, and then make the decision on whether or not you're willing to commit to the study. Because you're watching a lot of people at different points, different parts of the world, that are all catching the exact same trades, and it's pretty neat. Paul, you're trying to be first for the breakout. Yeah, not odds favorable, not through the area. Notice that your line isn't in favorable large triggers, Paul. Visually, ugh, I hate this one. And when the market gets stuck, 50/50s are less likely. You took probably the best shot at it. That's one that I'll typically sit on my hands and try not to be first. Every time I'm first, if I tell the market, hey, I'm going to be first, they go ahead and run me over. Luciano, everything says up and the path is clear. And you take a little different kind of trade, right? You don't take the pullback. You just kind of hop in because everything is railing to the upside. Clear path. And it works out for you. And your stop is behind the fib. I like it. I would have liked an entry at the fib even better. But your chart reading lets you know where the market shouldn't go in this situation. Your chart reading told you, keep a stop on this side of the fib just in case it comes back, right? The path is clear. This area is likely to stop the market if it retraces. And you're like, I'm just going to ride it to the upside. Nice job, Luciano. And then, yeah, Paul, that's the one, right? When the 50/50 doesn't work, you get odds favorable and a clear path. Giddy up. That's what John Novak calls the apology trade. When the one you just tried didn't work out, and the market goes the other way, keep your eyes open for potential entry. So, guys, my goal is that you understand that NextGen's here to help, that we're here to teach you, that we're here to support you, that we're here to give you a plan, something to feed off of every day, um, so that you can be successful. Let's talk about this one. People love this one. 6 signs you know you're maturing as a trader. If you guys have spent any time and been on that path, you're gonna love this one, right? The first thing is that you manage your risk before you ever manage your reward, guys. NextGen allows you to manage your risk through odds favorable momentum, through clear paths, through entries where the market is likely to continue. That's the first sign that you know that you're maturing to where you're more focused on taking the best of the best than you are daydreaming about the money that you can make. When you trust your rules, you're completely relaxed. When you've spent the time, when you've taken the pictures, when you've done the repetition, right? When you have the recognition, you're very relaxed when you're making trades. My palms don't sweat anymore. My heart doesn't race. I put my stops where the market shouldn't go, and if it gets me, I just don't care. But I make them come get me. Um, I don't force trades. I don't chase trades, right? If it doesn't get you, Paul gave us a great picture of that. If your entry rules aren't met, oh well, it's not your money. I love that picture. Trading isn't your daily adrenaline fix. Guys, if you're doing this because you love the adrenaline of hoping stuff works out, man, go jump out of a plane or swim with sharks, right? Run with the bulls. Trading's a job. Luciano, take care, man. We'll see you next week. You know you're maturing when you follow your plan. And guys, I'm going to tell you, you will have bouts of immaturity. We all do. I did last week. Um, but when you find yourself following your plan more than breaking it, you're maturing as a trader. If you don't have a plan, if you couldn't sell me your plan, if you couldn't take the microphone from me and teach me how to take your trades, guys, then you don't have a plan that you believe in. Who feels like they could do that? Who feels like they could take their plan and take the microphone from me and teach this class? At least teach this class their plan. Anybody? I could. I teach it every day. I teach my plan every day to this classroom. If you can't, if you're like, man, I don't think I could do it, maybe your plan isn't as good as you think it is. Maybe you need to look at that. And then this is my favorite one. Your worth as a trader and your worth as a person are two separate things, guys. I see this every day. I see people beating themselves up, down talking themselves, calling themselves stupid. All these horrible things that you'd never say to your spouse, you'd never say to a child, you'd never say to a coworker, but we all feel compelled to say it to ourselves, right? Um, and I'm going to share this picture too. This is from that book, Emotion Free Trading, guys. I'm telling you, it literally changed my perspective on trading. Um, Learning to day trade isn't always easy, guys. You've got to be easy on yourself. And the more accepting you are of mistakes, the easier it will be for you to make the next attempt. If you make a mistake, don't beat yourself up. Encourage yourself to try again. That's what I'm going to do. I'm going to encourage you to try again. I'm going to celebrate your victories, and we're going to dust off and get back at it. And I think this is one of the biggest problems with traders. They beat themselves up so much for their mistakes. It's a wonder that most don't have bumps and bruises after each trading day. You have to take it easy on yourself. Most people are harsher on themselves than they would be on their worst enemy. And all of this leads to poor trading results. Guys, this is one of the most true things I've ever seen. Debbie, have an amazing weekend. I will see you on Monday. It was an awesome week. And Debbie, congratulations on your consistency. Congratulations on your confidence. It's been so much fun watching you put it all together. It really has. Guys, take it easy on yourself. You know who you are. Take it easy on yourself. You can't make me mad because you lose a trade. You can't make me mad because you break a rule. Don't waste that energy, guys. It's wasted energy. And then I'm going to show one more thing, and then I'm going to call it a day because the class is just quiet at this point, and I'm just rambling. And I want to go through the too many mind concept, Gary. High probability trend trade, 3 rules and 2 charts, guys. That's 5 things to think about. 5 chart reads to make, 5 things that you have to put together in order to take a trade. The second you add the 50-50 trade, it's 4 rules on 3 charts, guys. That's 7 things to think about per market. And then you add a momentum trade to that. That's 2 charts and 4 rules. That's 18 things to think about. And if you guys are watching 3 markets, hoping to catch every dollar in the market, that's 54 different scenarios that are running through your head each and every time you're trying to make the decision to take a trade. Guys, I don't know about you, but I'm not that smart. And then you add the HVA trade, and it's 25 things. And you add an edge trade, and that's like another 33 things to think about on one market. Every time you look at this market, you're deciding what kind of trade it is. You're deciding if the rules are met for that trade. You're deciding if the conditions are there, if it's appropriate. But you're doing that for 5 different scenarios because your brain doesn't know off the beginning, guys. This is where mistakes happen. This is where indecision comes from. I want you to be amazing at this. And then when this takes absolutely no effort, get to the point where this takes no effort before you start adding things, guys. The biggest challenge that I see with new users is they want to be somebody else. They want to be the trader that has 10 years experience. They want to take every trade that they see people posting. They don't say, just give me clear path in a strong trending market. I'll buy the mid band and get paid on the way up. That's it. Everybody deviates from their plan at some point, guys. Everybody gets kicked in the clackers, no matter what your clackers are, boy clackers or girl clackers. The more pictures you take, the more feedback you get, the quicker you're going to start avoiding those problems, right? That's the whole idea. You found a lot of good trades today, didn't you? 50-50, one divergence, bottom of the window, money, money. Jay, have a good one. Paul, great trading today. Thank you for showing that rules win. Thank you for showing that it doesn't have to be difficult. Even more so, thanks for showing that you can take losers and still be a great trader. Except when you try to be first. Yeah, I'm sending a private message with a bunch of swear words in it to you right now for that one. Guys, have an awesome weekend. Don't let it all be Nexgen. Go do something fun. Go have a good time. Commit yourself to simplicity. Recommit yourself to simplicity. Um, Commit yourself to participating in class. If you have questions or concerns, email me. I'm glad to help you outside of class if you need it, but I'm not going to be your chart reader outside of class if you're not participating in my class. I always have to throw that out there. Don't send me 100 pictures that you were too scared to put up in front of other people. I'll send them back, tell you to annotate them, and give them to me in class the next day. That's it for me, guys. I hope you had a great week. I hope you learned a lot. I hope you're one